If you're looking to maximize your profits, then you need to know when to buy back a call option. And in this video, I'm going to show you how it's done and why it's such a powerful tool for boosting your earnings, especially when you're trading the wheel strategy. You see, when trading the wheel strategy, there's 3 steps to it. First of all, you're selling puts and you collect premium. Number 2, you might or might not get assigned. And number 3, if you do get assigned, you sell calls and collect premium. Long story short, when you sell an option, you collect premium upfront. So let me show you a very current example of a trade that I actually did yesterday. So we're jumping over here to PowerX Optimizer. That is the tool that I'm using. And here you can see the chart of Macy's. And you see that Macy has found a bottom here at around $17, $16.50. And you see, this is where yesterday the PowerX Optimizer suggested me that to sell a put and collect premium. And that's exactly what I did. So I'm jumping over to the calculator. And here you see yesterday the stock price of Macy's was $17.50. Now, I could sell it with 3 days to expiration. Now, yesterday was August 9th. So I had 3 days to expiration. And I was able to get 15 cents for this. Let me just collapse this because we're not selling calls right now. This way I can zoom in a little bit and show you exactly. So based on my account size, I should sell 71 contracts and therefore I'm receiving $1,065 in premium. Okay, so let's head over to my handy dandy iPad and explain to you what that means and also the concept of premium per day, because that is super important. All right, so here we are on my handy dandy iPad, and again, Macy's, we were actually selling the 17 put for 15 cents, and therefore, since I'm trading 71 contracts times $15, that would be $1,065. Now, if we divide this by 4 days to expiration, this means that I'm making $266.25 per day. So again, I sold this on a Tuesday. So on Tuesday, $266.25. The same on Wednesday, Thursday, and Friday. So this is the idea. But now let's take a look at the reality and let's see what actually happened. Because here's the deal. When you sold the premium up front and now the market is rallying, that is good because that means that now the premium is worth less. So let's jump over here again to the screen share and let's take a look at the chart of Macy's. So as you can see today, Macy's, let me just zoom in for you so that you can see it. So right here, the blue bar is today's price. And as you can see today, Macy's is up 5.78%. So quite a lot. So this means that the put option loses its value quickly. So after 1 day today, it might only be worth 2 cents. In fact, let's actually take a look at it and see how much it is currently worth. So I'm jumping over here to my trading platform, and on my trading platform, I see that right now the bid, and I want to zoom in a little bit so that you can see it better. So the bid is 3 cents and the ask is 4 cents. So it would have to rally a little bit more, but let's just assume that today this call would be worth 2 cents. Because honestly, that's what I'm trying to do right now. So I'm trying to buy back Macy's here for 2 cents. Because if it is rallying like today, you have basically 2 options. You can either do nothing or you can buy back the options. Now, when you're doing nothing, the process, if the stock stays above the strike price until expiration, you make an additional $142. How do I arrive at the $142? Well, let's go back to our handy dandy iPad. This is the 2 cents. And since options are trading in 100 packs, it would be $2 times 71 contracts that I'm trading here. So this is $142. So if I'm not doing anything, I would get an additional $142. However, when I'm buying back the option, you see, I planned to make $266 per day. Today, 1 day later, it's Wednesday. So this is where right now, if I can buy back today for 2 cents, let's just talk about this of what would happen there. So let me actually, let's use green here. So buy back at 2 cents, which would be 90% of the max profits. And that's what I'm going for. So let's see how much I would get. So instead of 1,065, I would buy it back. So I have the original 15 cents minus 2 cents is 13 cents times 71 contracts. So this would be $923. So if I can close it today, I'm already ahead of the game because I was planning within a day to only make yesterday 266, today another 266. So that's around 530 and something dollars. And if I can make 923 instead of only 500 something, it makes sense because this has also a few other advantages. For example, now I can get assigned. So even if over the next few days Macy's is tanking and is actually moving below 17, if I'm closing it today, I can't get assigned. Plus, I'm freeing up buying power because for this particular trade, as you can see here, if I would have to buy the stock, I would have to invest $120,000. So that's the buying power that I reserve for this particular trade. See, if now tomorrow the market moves lower and I'm buying it back today, I could sell it again. In fact, if we take a look at the scanner right now, we see that I could actually sell next week's for August 19th, 17 put, and I could collect another 19 cents. So makes a lot of sense, right? So there's one exception to this rule, and this is on the last trading day, and if it is far out of the money, I will not buy it back. What do I mean by last trading day? This is the day of expiration, which is the Friday. So because now I already collected 80% of the premium and might as well keep everything. Unless you need the buying power to collect more premium. So if you see, okay, there's other great opportunities in the markets right now, and I want to have the buying power because I do see a bunch of stuff lighting up on the scanner and I would sell more put, then you can buy it back. Now, I used in this example here the put option, but the same applies to call options. But it might make even more sense to roll that call option. And I'm going to explain this in another video. So I did a video on this. Check it out right here. It should be popping up. Take a look at this, and I'll see you in this video of when and how to roll a call option.